Today we tag it again. We finished the day 52 cents off the high.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. It's a treat to have you visit with us. We like talking with you about ag issues and ag markets, and today is no different. Remember to like these videos, subscribe to them by clicking the bell icon down below, and share them with others as well. Today, my very special guest is Relph of Comstock Investments. We're going to look at the markets at midweek here. And it looks like if you look at the grain sector here, Eric, it looks like maybe a small victory today for a change. What was driving the market here on a Wednesday?
Yeah, I think it's just pre-report jitters and trying to figure out which side of the market everybody wants to be on. You saw some liquidation yesterday, closed the soybeans below $10 for the first time in quite a while. But you get some follow through today, back above $10 on the close. A day does not make a market, but I think it's just preparation for tomorrow. The volume was really thin today, particularly in the grain markets. So sometimes you'll get some unmeaningful moves on low volume days. And today was just kind of one of those lackluster, how are we going to finish it out? Is it going to be green? Is it going to be red? And luckily we ended up on the top side of that. And so we'll see if we can get some follow through going into tomorrow.
Let's talk about this WASDE report. This would be our September edition that comes out. Do they usually have much black powder in a September report or not?
No, I've been trying to express that a little bit. The more important report that's very nearby will be the quarterly stocks report at the end of the month. This report is usually not much of a market mover because there's not enough harvest completed to really make the USDA want to move the dial much. However, average trade estimates looking for a 0.6 of a bushel reduction on corn yield, and that would be at a 82.5 versus 83.1 printed last month by the USDA. And then on the soybeans, they're actually looking for a 0.1 of a bushel increase at 53.3 versus 53.2 in the August report. So really kind of lackluster expectations. If we do get a surprise, you could certainly move the market. But right now, I think the trade's pricing in or expecting what they would normally get for a September report, and that's not much.
Now, in this particular report, the way that they gather the data is a little different than what they've done previously, right?
Yeah, and honestly, I forgive my ignorance somewhat. I'm not sure how their methodology has shifted completely, but I've been hearing more and more that they've been going more digital in their data gathering and not relying so much on farmer survey at this point, because there's little you can tell by driving by a field. So unless the combine's been out there or the chopper's been out there and you've had those appraisals done, there's really not much you can tell without some imagery and some more digital aspects.
So let's talk about how we're set up heading into the report here. As you mentioned, the corn didn't do too much, but it's hovering right around some important target areas. Now, once we get on the other side of the report that comes out tomorrow, how important is it that we hold these levels?
I think it's really important, at least to prevent, like in the case of the corn, to prevent a retest of those recent lows. I think it's important that we hold this 4 to 403 range in the December contract, and then obviously relative price levels to the deferred contracts. But the December $4 to 403 is going to be kind of critical. If we break that down, then there's a good chance we could go test lows, because obviously if we break that down, then there's a reason, and maybe that negativity continues for days to come. Otherwise, the soybeans, more than a single day close below the $10 mark becomes kind of important. Previous lows in the 960s, I hope we don't get down into that range. But there's arguments that we're sitting right here at on a line that matters. And hopefully we don't see a negative report that would close us below those and create some more negativities in the days to come.
Is storage going to be tight this fall, and are storage rates higher than what they had been in the past or not?
I would have to think it's going to be really tight. The rates aren't necessarily higher than what they have been, but everybody renewed their line of credit at a much higher interest rate. So hanging on to that cash, if you're having to borrow money to do so, it becomes quite a bit more expensive than what we were looking at a year ago. There has been some increases on the commercial storage side, but not exponentially, not notably, I guess.
So what do you think farmers are thinking this year when it comes to, should I let the corn stand out on the field and dry down naturally, or get it out early and go ahead and pay for the drying bill? Who wins that argument this year, do you think?
I think it's going to be based on your geographic location more so than anything else this year. If you're in an area where say you've got high set ears, you've got a genetic that sets some high ears, and you're vulnerable to high winds, you're going to have to get it out and you're going to have to dry it down. And that's the case for a lot of folks around here. For whatever reason, you've got a lot of ears set at 5 feet or higher. And if you get 40-mile-an-hour flatline winds, you're causing major problems, and the harvest of that just becomes a nightmare. But in the quieter areas where you don't have the genetically high set ears on the plant, you're not as top heavy. You got some decent root down because you weren't wet during the planting season. All these things are going to factor into that decision making process. But there's a lot in the plains that will leave it out to dry down. And here in the heart of the Corn Belt, Iowa, Illinois, I think they're going to be a little less apt to do so, and we're going to have a lot of drying to be done.
I know you and I had talked earlier this year that through your travels, you thought there were more soybeans. There was surprisingly large acreage of soybeans this year. But on the other hand, I keep hearing that because of the hotter, drier weather that has been prevalent here over this past 3 or 4 weeks, it seems like the beans have run out of gas sooner than expected. Are you hearing that?
Yeah, absolutely. Those specific areas where I was seeing a ton of soybean acres where I wouldn't have normally. I made the comment at that time, they're behind. You could tell they went in after wheat stubble in a lot of cases. And most of those plants that I was looking at, and this was on September 15th, 16th, that range. So exactly 3.5 weeks ago, and it turned off dry right then. And the temperatures have remained high since then. And so those plants that really needed a good shot of rain and maybe some moderate temperatures coming into the finish line, they didn't get it. So I don't know what the production will be like for those areas, but I can't imagine it's going to be overly impressive, especially on the light soil ground.
Well, I want to bring up a wheat chart here and take a look at what's going on with the wheat. It looks like maybe it had a significant bottom here about 3 weeks ago or so.
Yeah.
It's still kind of building on it, but it did have a little bit of an intermediate high here about a week ago, and so far it can't take it out.
No, and just moving sideways for that time frame. So yeah, looking at the Chicago contract specifically, the December's the most important here, and here's kind of what you're talking about. You had this 6-session rally off a low and made a high there on the 4th, and just looked really good there. And then since then, we've been straight sideways for a week. And today is the highest trading day we've seen since making the high. That was at 582.25. That other high is at 582.75. So here again, we set back 3 cents off the high to close at a nickel higher. If we can't move through that 3.5 cents and make a new high, and more importantly, close at a high, then we're not going to have a chance of challenging this 100-day moving average up here at 617. So technically you can make arguments that maybe that was meaningful, but the next day you take it out and all is well that ends well. So it's going to depend a lot on what we see tomorrow morning at 11.
Well, let's take a look here at the meat markets here on a Wednesday. Everything a little bit higher.
Mm-hmm.
Are they treading water? It looks like feeders gained a little ground here anyway.
Yeah, and actually this is something that I was kind of making note of earlier today, right before we came into the close, looking at the October feeder cattle contract specifically, because September's spot month, it's tied to cash. Don't really know what to expect out of that, but the 23-day exponential moving average has been resistance several times throughout, forever. It's just one that the algorithms really watch pretty closely. We made some meaningful highs over here for 2 days. We go tag that moving average and we fail. Today we tag it again. We finish the day 52 cents off the high. You take that out tomorrow, close above it. You could keep stacking something on here. However, if you don't, then you're going to fall back below trend line and probably be range bound for a little bit. So I'm actually leaning towards getting a little bit of protection on in some of the deferred feeders, at least lay off some of that risk, protect a break even, protect your operation on some percentage of the feeder cattle. So, whether it's LRP or put options or futures, whatever the case may be, I think it warrants, after the move we've seen this week alone, to take advantage, because we just don't know what could happen. And the way we reacted to the stock market on Friday, I think gave some traders some weak knees moving forward here for a little while.
If you look at a lean hog chart on the daily charts, it looks like it's just pretty well confined to an uptrending channel.
Yeah, that's
still in there.
Yeah, we went down, tested the bottom end of that channel for a couple of days, and then today you finish $1 higher, and all is well that ends well, and that's kind of the way it felt today. And that was despite a lower midday cutout and unreported cash trade today because the volume was so light. And so, the Packers have the upper hand in the fundamental market, but the futures continue to work in this uptrending channel and actually don't look too bad.
One thing about it, the Dow had been lower during the day, and I was kind of impressed to see that the livestock, especially cattle, managed to trade higher, even though the Dow did come back a little later on. But
Yeah.
maybe they're able to break the shackles a little bit now. What do you think?
Well, on the down days, that'd be great. The Dow actually traded over 700 points lower at times today, and then comes back to within a 100-point loss and looked really good. The Nasdaq was positive. The S&P kind of had similar action. You trade double digits lower, come back to double digits higher, and not all bad. And considering the fact that we were seeing that kind of weakness, and this wasn't like overnight futures weakness. This was after the day session had gotten started. We saw this break in the stock market. And the cattle, yeah, they traded lower, but $1 lower in the feeders, 40 to 60 cents in the fats. So it was nice to see them keep their head above water for the most part, given what was going on in the equities.
Well, Eric, always good to visit with you. Thanks for breaking down what took place in the markets. And we're getting set up for the release of the WASDE report. Just a reminder that will come out tomorrow on Thursday at noon Eastern time, 11 o'clock Central time. And be sure and check out those numbers after they come out. We'll see what kind of market impact we get after that. That's Eric Relph of Comstock Investments. That'll do it for this episode. Thanks for joining us. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel.